everyone, thanks again for joining. We're here with Loan Risk Advisors and Race Neitschevelle. We're going to focus on a few things that are kind of states related versus federal enforcement related. Thanks, Ray, for joining us. So the first thing is, just curious, what are the hot buttons and focus priorities of the states now that the states are picking up the pace since the CFPB resources presumably or otherwise moved away?
Yeah, so I mean, let me at least look in the rearview mirror and what they have been doing. But I will tell you that over the years, I think the state examiners have gotten more probative. I think they're asking deeper questions, harder questions in their preparation for exams. So in the questionnaires, so on and so forth, they're asking more information, whether it's financials or who are your licensed loan officers, digging for maybe unlicensed activity, et cetera. But they've gotten more probative than before. The things I'm seeing most currently is, well, cybersecurity is a big issue. I'm seeing that state examiners are asking about cybersecurity plan and what have you done and can you prove you've done and provide documentation. The states I've seen this, enforcement actions as a servicer who had a multi-state kind of enforcement based on cybersecurity. I'm expecting that was probably because of a breach of sorts. But again, cybersecurity is now what the states are pushing. The other trend, that's what's coming up for a little bit, I think a year or two, and I think that's AML-BSA, so Anti-Money Laundering Bank Secrecy Act. And in that context, they're asking, again, lenders, where's your plan? What have you done? Keep in mind with AML-BSA, you have to do a couple of things. You have to have a process that you file a SAR if you suspect any kind of what we basically would call fraud in our context. But you also have to do routine audits like every 12, 18 months, something like that, right? So they're asking now for these plans and what have people done? Oh, the training as well has to be done. And that has really kind of heated up a lot recently. There was even, I think, a recent enforcement action there, I think state of Washington. And I think it was because the lender, the licensee, didn't provide the documentation that they promised or something in regards to their AML BSA program.
You know who'd be great as you're going through that? I'm thinking about Bob Simpson, right, with Daylight AML.
Daylight AML. Yep, you're right.
Perhaps we can, in a follow-up, include him in this conversation because I wish he was here, where we could
Agreed.
Go to him right now and get his take on it as well.
Exactly. Good idea.
Yeah, indeed. Cool. Any other areas where the states will be turning up the heat or focusing on more?
Yeah, I think so. As we know, the former director of CFPB, when he stepped on his way out, kind of lit up the states and saying, here's a state plan to enforce consumer protection laws. And reviewing that, some of it's commonsensical and a lot of it's not new. He's saying, the states already have the right to enforce federal laws. So he's reminding them that they can do that. So to answer your question, I think states have pretty much had the position that they could enforce federal law one way or the other, meaning sometimes it's a direct enforcement of the federal law. Other times it's using a state law where the violation has to do with the federal law, and they're asserting themselves using state law by the mistake or the non-compliance on a federal law. So maybe they'll be using state UDAPs, unfair, deceptive acts and practices kind of law for something that was triggered by, I don't know, RESPA or something. But I do think that that we're going to see states assert themselves a little bit more. Yes.
So given all that, do you think there are other forces, other players that will become involved increasingly in the day-to-day?
Yeah, I think, we first are thinking about our standard regulatory authorities at the state. So our licensed agency, who will do our routine audits and enforcement. And that's true. It's kind of what I talked about. But I don't want to have people forget about attorneys generals. Attorneys general are also in place to enforce the laws, and they have in the past. And we've seen that before multiple times, even well before the CFPB and even afterwards, that they do have momentum in their own right, either individually in a state or sometimes do it as a collection of states doing an enforcement action. And so they can also use the laws, more of enforcement, not routine audit, but they're going to do more of an enforcement on particular entities, and that could be lenders as well. So is it possible? Yes, I will say Chopra in his plan, kind of also advise attorneys general, you can also chime in and do your work. So to answer your question, I don't want to forget that it's not just the state examiners we're used to or the state agencies, it's actually the attorneys general. And when they do things, they're a little bit more political.
Given what we discussed so far, what do you see the upside or downside might be around the states having to step in here and do the job of really examining and enforcing federal laws?
I think one of the things that we have to think about is a return of the patchwork or quilt work, if you will, of of laws. What I'm saying is before we had the CFPB, the non-banks were regulated at the state level. So we had to deal with multiple laws that were different, in each state for very similar things, fee limitations, so on and so forth. And we still navigate that right now. When it came to now that it's coming with federal law, the one thing the CFPB we can say at least did, I believe, is give an interpretation on the law. So, for example, if in Truth in Lending Act, in many places we have, unforeseen circumstance, right? There's an exception to the rule based on unforeseen circumstance. If we ever went to the CFPB and they gave us clarity what that means, we kind of can live with that because that's the one source we go to, and I submit the states would listen to that too. Now that we're going through examinations with states who maybe want to look at unforeseen circumstance under federal law, one state might see unforeseen circumstance like this, another one will see it like that. Of course, we might see it differently. So now we have multiple interpretations of what an unforeseen circumstance is. And remember, we have to operationalize this on a national basis. So it's not like we can adjust for this state and that state. So I think what's possible is we might have different interpretations of the same federal law or nuances of federal law. And I think that could be one of the risks we think about. So the other thing is dealing with the federal issue and how we respond. Well, now we're dealing with states, and that is when we have an examination and a finding. Meanwhile, depending on the state, we might respond a certain way. In other words, if we find an unforeseen circumstance was an issue and they're asking for, let's say, the state's asking for refunds and we only did 4 loans in that state, well, was it a combination? We disagree with their legal logic, but was the combination not worth the fight? There's no economics behind fighting how right we are. We'll go ahead and make the refunds on 4 loans. Well, if we use that same logic, the same legal logic now applied to a bigger state, do we want to concede now? Because now we're talking about, the multiple refunds we have to do, that might be different. And the economics are different. So now are we being two-faced? And in one state, the appearance is we were okay with it with one state and we're not okay with this state insofar as interpretation. Of course, that's not really the case, but that could be the perception because now we might respond differently on the same issue at the federal level. Again, we can navigate through these things. I'm not concerned, but we just have to be aware of that. So I'm not saying we don't do the refunds on the 4. I'm just saying we have to be prepared in how we articulate that and document that. So if it's ever thrown back in our face that we did it before, therefore we should be able to acknowledge that interpretation again. It's like, no, that was an accommodation. That wasn't a concession. So some things like that. So to answer your question, I think having multiple regulators dealing on a single issue could give us more challenges, maybe back to where we were in the past.
Very interesting. So it sounds like there's a lot of complexities, but it's not that easy, but it's not that hard, right? As long as someone has guidance and someone to help them through that. And how are you advising your clients today at Loan Risk Advisors?
Like always, good preparation. But look, I think we shouldn't be focusing on the fact that we have multiple states maybe doing things with the examinations. I think the landscape for us remains the same. We have to be steadfast and true in what we believe the law to be and how we're applying it in our operation. What is our policy? Why did we come up with it? Document it well, and not get too rattled by how the other forces might be coming out and there's going to be multiples and that kind of thing. Really, I think if anything, invest yourself in the time and the energy to determine what your policy is and why. Maybe more documentation, consensus, same message as to, what's that example? What is an unforeseen circumstance? We determined that it's this, and we're sticking to it, right? So I think it's really looking inward and being, again, confident with your policy you have in place, articulating it well, make sure that everyone has the same message as to what it is on an unforeseen circumstance or multiple, obviously, hundreds of points of risk that you have to articulate. So that's what I think. Don't get rattled by what's going on outside. Focus inwardly and make sure you've dotted your I's, crossed your T's, and that you're confident in what you've done because I'm sure what you're doing is fine and solid. But just stick to that and have the confidence with that.
Great. Thanks so much. For those who do want to expand on that and dig into that, everyone knows they can reach out to you at Loan Risk Advisors. We'll include, of course, all the information, your contact info, how to reach you to have you help and answer any questions anyone may have around this. Always insightful, sensible, and great advice. You're shrugging that off, but it's true. So thank you so much for joining us today for another session here, and we'll look forward to next week with more news. We'll have another, and ideally include some others in this. And
yes, agreed.
Good, very good. Well, thanks again. Have a great day, and until next time.
Thank you.
Okay.
Thank you.